Hey, welcome everybody. Today is Wednesday, April 29th, 2020. I'm Mark Dannenberg, and this is the Options Moneymaker Q&A session. Also with me this evening is Aaron Rumley, Michael Kastner, and then our friend Craig from New Cycle Trading and Analytics, who's the head of programming and development. So we're going to go ahead and get started. For those of you who may not have been to one of our Q&As before, the whole purpose for this is to follow along with our mantra that is learn to trade and then trade to earn. There's a fair amount of learning that is necessary for anything, any serious endeavor that you take on, and what we are focused on is helping you learn. So we can't define exactly for you how you're going to use the knowledge that you gain about trading, but we are here committed to helping you learn everything you desire to learn. So that includes categories such as our profit flow analytics charts, which is, when I say ours, we've kind of embedded ourselves and collaborated so extensively with New Cycle Trading that is the chart platform that we use and that we promote, and is just a phenomenal platform. There's a masterclass that we taught in January specifically around the profit flow analytics charts and specifically around the Cycle Finder Plus. So those are the tools that we use to define where we enter a new position. And after we know that we have a good entry point, we can decide what type of strategy we want to use. We're following along with these charts every single day in the live trading room. That allows us to show you in real time what types of signals there are, how to read and interpret the signals, actually help you identify those signals. That's primarily what Michael Kastner is doing each day in the live trading room, and providing some additional tools and information that he has at his disposal, and based on his years of knowledge and experience with trading. Now, we also have a fair number of people who have in the past and are currently going through our Profit Builder Plus education program. This is all oriented around options education. It's all oriented around helping you learn from the very beginning. If you've never traded an option, this program is right for you. If you have years of experience trading options, but you want to learn a little bit more about strategy, or you want to revisit some of the basics of options trading, this program is right for you. But we're here to answer questions about that program also. Then we have a futures trading education program that is all about learning the risk and reward of futures. We have a combination of options traders and futures traders in our community of traders. And in the live trading room, when we're helping you identify trading signals, a signal to perhaps that indicates that the market may be moving lower, or a signal perhaps that the market might be moving higher, those signals are a generic signal. You can then decide whether you want to take that signal as a futures trade or possibly as an options trade on an index. And there are other signals that we can also help you identify to take options trades on stocks. So the beginning of any successful trading is knowing when to get into the trade and when to get out of the trade. And in the middle is what type of strategy you're going to use to take advantage of that signal. We provide education on both futures and options. And we're going to talk a little bit about some advanced option spread strategies tonight. We also offer one-on-one coaching for intensive immersion in learning how to trade. I have a fair number of people that I work with who have just decided to spend an hour a week of their time really dissecting their own trading, having a two-way exchange of information and ideas, and it's helped advance their trading to a whole new level. So that's available also. And then the last thing is our friends at New Cycle Trading and Analytics. They host a forum that's accessible at traders.newcycletrading.com. And this forum is an opportunity for traders to exchange ideas, to see what's going on at New Cycle Trading. Craig is very active on the forum, and he's posting things that he's personally doing in his own trading. And it's a great place to just stop in if you want to go visit, leave a comment, leave an idea, leave a thought, leave an opinion. It's an open forum for any trader to use. So we recognize that most of what I just shared with you is focused on learning. And sometimes there are gaps in learning. You come across a key point. You wish you had somebody sitting right there that you could ask a question of, but we make ourselves available every other Wednesday because we know that those questions are important to advance your learning. So we're here to help you. And before we get started in that, I want to talk about 3 topics tonight. I'll talk about a new indicator that's coming to the charts, the Profit Flow Analytics charts by New Cycle Trading. And then we're going to talk about some updates that we've made to the Profit Sweet Spot Matrix. And then we're going to finish it off just a couple of minutes on an opportunity to learn some advanced option spread strategies. So divergent bars are a indicator that we have talked about quite a bit in the live trading room, and it is an important and distinctive indicator that often aligns with a Cycle Finder Plus. So we're primarily looking for Cycle Finder Plus crossovers when we look at a combination of a 3-minute and 10-minute chart. And when we see a Cycle Finder Plus crossover, and there also happens to be a divergent bar preceding that, it adds additional strength and confidence to the trade. We don't trade divergent bars by themselves as a standalone indicator. That's possible to do. It's not something that we do here at Options Moneymaker, but you can now add those divergent bars to the chart thanks to Craig and his team, because in addition to the divergent bars, we're also giving you a very simple one indicator to also add fractals to your charts. We get a lot of questions in the live trading room about fractals and divergent bars. So we've merged them for your convenience into one indicator, and that also helps for those of you who may have a limit on the number of indicators that you can have on a chart at one time through TradingView. Instructions on how to install these indicators are going to be sent out tomorrow. Aaron's going to be doing that. So I'm going to just explain one last thing here, and then I'm going to jump to a chart and show you exactly what I'm talking about. Also coming soon is a version of an expanded version of the Cycle Finder Plus. It's going to be Cycle Finder Plus 2.0. It's going to include divergent bars on the Cycle Finder Plus, and it's going to give you some indication of the strength of that divergent bar, whether it's a strong divergent bar or perhaps a weaker divergent bar. And again, we're not specifically trading divergent bars, but if you can add a bit more information to the signal when you have a Cycle Finder Plus cross, it just increases the probability that you have a successful trade. So these signals, these divergent bars often align perfectly with a Cycle Finder Plus crossovers, and we're going to help you understand based on size and color of the divergent bar indicator what the strength of that divergent bar is. So let me just jump to the chart here real quick. So first of all, on the price bar itself, what you see here is a set of upside down V's and right side V's. So there's red V's and green V's. These are fractals. So the importance of a fractal, I won't get into teaching that as a concept here tonight, but the importance of the fractal is that if the price breaks above or below an identified fractal, it can mean that there's going to be a continuation of movement in that direction. If the price moves up to the fractal and reverses, then that can be interpreted as a level of resistance, or if it moves down to the fractal and reverses, it can be viewed as a level of support. So that's the green and the red V's here. Those are your fractals. Also, you'll see a yellow and a blue triangle. Those are your divergent bars. A yellow triangle indicates a divergent bar, what's called a bearish divergent bar, and a blue triangle indicates what's called a bullish divergent bar. So they help you assess the chart, and they help you to determine that the market is implying that it may want to go lower, doesn't all the time, or the market may be implying that it wants to go higher. Now, as I said, we don't use those by themselves, but we use them in conjunction with the Cycle Finder Plus indicator. So there are some other things that we'll be talking about regarding those divergent bars. Michael talks quite a bit about them when you're taking a futures trade and how to use the divergent bar. If you have a 10-minute cross on the Cycle Finder Plus and it aligns with a 3-minute cross on a Cycle Finder Plus, and you have a divergent bar, we'll use the divergent bar as a help for where to enter the trade when you're trading futures. And you can also do the same thing when you're trading options. We'll talk about that some more in some future training that I'm going to talk about here. Here's an example of what the Cycle Finder Plus 2.0 is going to look like. These red dots here are indications of short divergent bars. So if there's a red dot in the buy zone, it means that there's a divergent bar that implies that the market's moving lower. If there's a blue dot in the sell zone, which you see back here, that implies that the market is indicating it wants to move higher. So the various colors and the shapes are going to be talked about in some training that we have coming up. It's too involved right now to go through the details of this, and we're not ready to release the indicator to you right now, but we will within the next couple of weeks, and we'll be sending out an announcement in the next couple of days as to when we're going to set up some training. It'll be a free training, and for those of you who have the Cycle Finder Plus, you'll be able to add this version of the Cycle Finder Plus to your charts, and we're going to just teach you how to use it. So the summary here is, and Craig and Aaron are here, they've both done quite a bit of work on this. If they want to chime in, that's fine. The summary basically is we're putting the divergent bars on the chart, and Cycle Finder Plus 2.0 is going to have some other indication of the strength of that divergent bar. And so we'll explain the color variation, and we'll explain how to use this. And then you'll have an option. If you want to use the one that's on the price bar, that's up to you. If you want to use the one that is Cycle Finder Plus 2.0, that'll be up to you. We're just creating options for you. Craig, Aaron, do you have anything to add to that?
I think you gave a really good description there, everyone. Yeah, the notion, I think, in general of what we wanted to add to the Cycle Finder was simply that we have a core signal that doesn't really change. We're still looking for crossovers of that line, but there are some other indicators we wanted to kind of add in there to give you an idea of just how strong or how viable that signal was, and when I should really be looking to act on it. So all that stuff is in there. Like you mentioned, a lot of it is very focused around divergent bars. But there's also some weighting and some other kind of analyses that we put in there too, essentially just to give you an idea which is the best signal to take.
I think Craig spends 23 hours a day thinking up ways to enhance, improve, and make better the signals, all for the benefit of you.
23 and a half.
Well, see, I was going to say 23, but now during quarantine, it's probably 23 hours and 50 minutes, right? Because you've got a little bit more home time.
It's directly a function of how aggravated I might become with the market movement lately.
All right, so stay tuned, folks. You're going to be getting an email tomorrow with how to put the price bar version of divergent bars and fractals on your chart. And then in the next few days, we'll send out an email scheduling training. It'll be fairly simple training. It won't be involved at all. It's going to be free training. And you'll be able to then learn how to use the more advanced version of the Cycle Finder Plus. Okay, so let's talk about daily crosses. One of the things that we use the Cycle Finder Plus for extensively is to track the daily crosses. We have a watch list of stocks and indexes. Those of you who have spent any time at all with us in the live trading room know what stocks and indexes we trade. And Aaron does a great job of tracking the daily crosses. And what that means is when the Cycle Finder Plus crosses above or below, when the lead line crosses above or below the basis line on the daily chart, that gives us an entry signal to either buy a call or buy a put. And we track every one of those. And we report on them here in the Q&A, just to kind of give you an idea of how they're performing. And every morning when Erin identifies those crosses right at the open of the market, she calls them out in the live trading room. So any of you who are part of our live trading room community can choose to take all of them as a trade or some of them. We spend 45 minutes pre-market talking about what might be happening, and we look at pre-market activity. We can anticipate what might be crossing. We can look at the other time frames as supporting patterns for that cross. So if there end up being 3 crosses in one direction or the other on our watch list, you can already be prepared knowing which one of those or which 2 of those you want to take. So it's pretty efficient. And what we've identified is from February 24th through April 29th. And the reason we started with that is because we have all of the history in a tool I'm going to show you in just a moment, the Profit Sweet Spot Matrix. But we started taking a look at February 24th because that's really when chaos entered the market. And I want you to see how effective these daily crosses can be. If it's something that you're interested in showing up to the live trading room, just for the first 5, 10, 15 minutes of the market day, identify a daily cross to take, and then open that, place a good to canceled order to close, and go about your day. There have been 85 daily crosses on stocks and indexes that are on our watch list. 78 of those have been profitable, and 7 of them were losers. We estimate a 30 delta. We usually focus on a 30 delta. 50 deltas on some of these stocks and indexes are too expensive. We can go out as far as a 10 delta, but to just kind of level set everything, we focus on a 30 delta. And of course, you can choose whatever delta you prefer. But the total profit for those is $263.69 per share based on one contract. So it's averaging about $3.10 profit per share per position. And it's generated $26,369 of profit in those 48 market days. So it's averaging about just under $550 of profit per day. So I hear quite frequently people in live trading talk about, their goal is to trade futures, their goal is to trade micros, their goal is to trade whatever strategy they prefer, and that their desire is to make $400 or $500 a day. So if you think about $400 or $500 a day, $500 a day, if you did average that over a 20-day trading month, is a $10,000 profit per month. So that's an average. You're going to have wins, you're going to have losses, in this case 78 profits and 7 losses, but it's very possible to incorporate daily crosses as part of your overall trading. And one of the reasons that we're sharing this with you is because the Profit Sweet Spot Matrix is a tool that we created that incorporates the power of historical data, so very specific historical data to help guide you into choosing your expiration, your strike, and your delta when you're trading options on these stocks and indexes. There's so many questionable decisions that traders need to make. How long do I hold? What's a reasonable profit? How soon do you think that I'll see the stock or index move to hit my profit? We've incorporated all of those questions into this tool that we built. And Aaron is really the kind of the guru of this tool, the Profit Sweet Spot Matrix, and has just done a phenomenal job of creating this for your benefit. It empowers you to align your personal risk tolerance to a desired win-loss ratio. Lots of traders ask me, well, what's your win-loss ratio? And before I even answer, I have a whole bunch of questions, because most people who ask that question don't really know what that even means, what a win-loss ratio means. They don't know how to look at it. They don't know how to evaluate it. They don't know really how to assess it. So they're off on the wrong track. What we've done is we've incorporated data on every one of our stocks and indexes since January of 2019, tracking every single daily movement on the Cycle Finder Plus, and it's available in the Profit Sweet Spot Matrix. So it's this very powerful tool which now allows you to just enter one or two very, very simple bits of information, and it will feed back to you what you can expect in the way of movement. So we've now updated this. Prior to today, when we released this in January, we had it updated for all of 2019. As of right now, it's updated through the end of April, and we're going to make it available to everybody to get the updated version. It's all the daily historical data through the end of April from January 2019, and we've also added all the historical data for Shopify. It's another stock we've added to our watch list. And periodically we start evaluating stocks, and if we decide to add it to our watch list, then we incorporate all of that data into the Profit Sweet Spot Matrix, and then we can make the tool available for you. So on Friday, there's going to be an email sent out with instructions on how to purchase the updated version. It's just $97 to purchase the updated version. It's really inexpensive considering the amount of time and effort that goes into updating all of that data every single day. Now, we gave each of you who have the PSSM the ability to update your own information every single day, but not everybody does it. Not everybody wants to take the time to do it. Some people maybe fell behind, or they started doing it and then they just stopped. So we're making it available to you. And it's not free because it involves quite a bit of time on our part to make this, update this and make it available to you. So email will go out Friday showing you how to purchase that. So let me just show you here real quick the PSSM. So if you've not seen this before, this is a tool which literally you can scroll back to January 2019 on any stock in our watch list or index. We track Amazon, Booking, Google, Shopify, Tesla, NDX, and SPX. There's also a template in here that you can load in your own data. You can go back and do as much history review as you choose on any stock that you want to evaluate for yourself. At this point in time, if an options trader were to ask me this directly, do I need the PSSM? I would say I personally would not want to trade anything without the PSSM data. And the reason is because it gives me a few basic data points. Forget about all the detail here just for a minute and just look at the banner up at the top. It tells me on any individual stock how many winning trades and how many losing trades there have been, what the percentage win-loss rate is, and this is based on historical data, not just a glance back. And this is the key right here. If you're a trader that likes a fairly conservative approach, you may desire an 80% win rate. What that means is if you were to open a position, as an example on Shopify, and you bought to open a put, you set 80% in this header here, and it will calculate for you this number called the sweet spot. In this case, the 80% win rate is a sweet spot of 6. What that means to us is that as this tool looks back historically, it has determined that 80% of the time Shopify will move 6 points or more. 80% of the time Shopify will move 6 points or more. And then you take that 6-point sweet spot, 6-point targeted move, and you multiply it times the delta of whatever option you've decided to trade. If you're trading a 30 delta, you would be setting a profit target on that trade of $1.80. It's taken all of the anxiety and all the guesswork out of, well, what should I hold for? If you're a more aggressive trader and you want to trade, say, and you're happy with, say, a 60% win-loss ratio, well, that is going to give you an 11 point sweet spot. And say if you're trading a 50 delta, you're going to set your profit target at $5.50. So you would just add $5.50 to whatever your cost basis is of the option, and then you would place a good till canceled order at that price and let it alone. The next time you need to check on this position is the following day. There's no other activity necessary on this position during that day. If it hits your good till canceled order to close, that's awesome. If it doesn't, you look at it the next day. If the trend of the Cycle Finder Plus is still in the same direction aligned with your position, you leave it alone. You don't do anything. We had a couple of positions earlier this week and end of last week that it took 2 or 3 days for our good till canceled order to hit, but it did. And so you just have to be patient on these. Another key data. Go
There's
ahead, Aaron.
another step in there that actually happens prior to market open. So if you do end up having to hold the position longer than a day, which our average time in trade is less than a day, so you're in and out in the same day. But if you do have to hold it overnight before the market even opens to evaluate whether the Cycle Finder Plus is still aligned to your position, you should look at pre-market data of the stock or the underlying that you're holding, because if you are long, if you're holding a call on Amazon and Amazon reported earnings and is up 100 points, you might want
270
to,
points.
yeah, right, you might want to adjust your closing order for a larger profit target than the original sweet spot profit target that you had set when you originally opened up the position.
Thanks, Aaron. It also calculates for you what the longest cycle time is and what the average cycle time is. So I talk to a lot of traders who will say, well, I'm only comfortable trading if I buy an option that's 60 days out expiration wise. Well, you might be paying a lot more than you need to. So what we advise is go at least 1 week out beyond the average cycle time. And so what that does in my mind is it optimizes your trading capital. It tells you historically, well, 14 days is the longest so far. Could end up with a cycle that's longer than that. 6 days is the average. All right, so if I go out, say, 1 to 2 weeks, I'm within the range, and I am comfortable that I should be able to exit out of the position before that. And then the last thing I'll point out here is you end up with some totals. And this is by each individual equity. The stocks that we trade and the indexes that we trade. This total right here that says 992, if you had held every one of your trade for the reversal, so that means that Cycle Finder Plus crosses down and you don't do anything to close it until Cycle Finder Plus crosses up, and we're only focused on beginning of the day crosses. That 992 points is the total number of points that you would have accumulated since January of 2019. And if you use a sweet spot, an 80% sweet spot, you're accumulating 328 points. Now that's a pretty healthy difference, 654 points. And we have a lot of discussions around that with people who use the PSSM extensively. And this is where you can start to play around individually with, well, what do you want your desired win-loss ratio to be? Using a reversal number, you're going to have some big losses, maybe some bigger consecutive losses periodically. And so you just have to evaluate whether or not it's something that you can emotionally work your way through. We typically look at 80%, maybe 60%, but again, what we've done is we've designed this tool so that you, as an individual trader, can use it according to what your own personal comfort level is. So Shopify's been added, and again, we have Amazon, Booking, Google, Tesla, NASDAQ, and the S&P 500. All right, so the last thing before we get to Q&A is, my personal belief is that continuous learning and expansion of knowledge, no matter what area of your life it's in, is the best path to success. So that's true about trading. That's true about relationships. That's true about anything that you desire to improve in your life. So we have been using more and more what we call advanced spreads in the live trading room. And we're trading strangles, we're trading calendar spreads, we're trading double calendar spreads, trading market tamers. And we've been getting more and more questions about them. So I just want to put this out here. It's available for you if you are interested. I'll give you just a couple of key points here. But, we all as traders, especially when we're just starting out, end up putting ourselves in a silo. And that's where you kind of understand a single strategy and you really don't have any knowledge about the relationship between that strategy and other strategies. And I think it limits a trader and it interferes with long-term success. When a trade's not working out, it's important to have some knowledge of how you're going to evaluate that in order to recover. You are going to have losing trades. You're going to have trades that don't work out. Don't ever assume that just because you learn all this stuff that you're not going to have losing trades and that you're not going to have losing days. It's just going to happen. Silo knowledge is the biggest reason for inconsistent trading performance. You're going to have periods of success that you celebrate, and you're going to have periods of losses that are just confusing, and it's mostly driven by lack of knowledge, and it's very frustrating for you. So we want to get you on the right track. We want to help you get on the right track if that's something that you choose to do. We're not pushing anything here. We're just kind of making this available because we've gotten so many questions lately about the advanced spreads options strategies that we're using in the live trading room. And understanding multiple strategies and the relationship between them is truly starting to get to the root of the art of trading. So as one example, a market tamer is an advanced spread strategy, and it combines both a put and a call spread. You can use a diagonal or a calendar. We've been recently using calendars into a single four-legged position. And basically, you're buying to open a call and you're buying to open a put. Those have the same expiration, and they have, this is the key, they have reasonably similar delta values. That call and that put have to have reasonably similar deltas. And then you also sell to open a call and you sell to open a put using the same expiration and following the rules for diagonal and calendar spreads, which we teach in the advanced course. The strikes on the short call and put are going to be different with each being out of the money. So here's just a real quick example, and then we'll get into the Q&A. If I was going to open a market tamer on the S&P 500 and the S&P 500 is trading at 29.49, I might buy to open an SPX 2800 put, and it has a 31 delta, and also buy to open an SPX 3085 call with a 30 delta. All right, so this one is about 136 points out of the money, and this one's about 149 points out of the money right here. Okay, and those are June expiration. So the long legs are always going to have the same expiration, but you notice that the delta on the put is 0.31, the delta on the call is 0.30. And the whole reason for that is as the market moves higher or lower, for all practical purposes, these will mostly offset each other. You're going to have a profit on the put as the market moves lower, and you're going to have a loss on the call, but it's going to be reasonably similar in terms of their value appreciation and or degradation. And then we have the short put with a May expiration, so a month earlier, that we sold to open the same strike, and we sold to open that for $26.90. And then we also have a May expiration 3085 call that we sold to open for $10.30. So the cost basis on the four legs is $84.30. Now you can do this for less, and there are ways to do that, and you'll learn that in the advanced spread trading. And also we talk about it in the live trading room. The short leg credit is $37.20. So the combination of the short put and the short call, $37.20. The whole reason we trade this strategy is to leverage the rapid decaying time value on the short legs. It's going to be far more rapid than the long legs, and that is to our advantage. So the two short legs are going to provide a lot of time value decay, and the two long legs will mostly offset each other. If 10 points of this $37 decayed away and the long legs are offsetting each other, that's a better than 10% return. So this is just a real brief overview of how something like a market tamer works. We've been trading some of these in the live trading room, and it's the knowledge for the market tamer is embedded in our advanced spread training. And it's going to, the advanced spread training is going to cover calendar spreads, diagonal spreads, and market tamers. It also shows you how to use these strategies as management when a position is not working. They can be used on stocks, ETFs, or indexes, and you can use, especially on SPX, you can use weekly or monthly expirations, which is a real advantage with SPX. You can open up the strategy. You can use a good to canceled order to manage the trade, and you can check in on it once a day. It's a pretty low maintenance strategy. So if that's something that interests you, again, this is just intended to be a quick overview. We've been talking about these strategies quite a bit in our live trading room, got a lot of questions about them, so we thought we'd make this available. You can go to optionsmoneymaker.com/advanced spreads. And the course, the entire course, how many sessions are there, Aaron?
Oh, being on the spot, 4 to 5?
Five sessions, I think it is.
I believe so.
I think we originally did 4, and then we added a bonus section.
Yes.
Yeah, so there's 5 approximately 1-hour sessions for $597. If that's something that interests you and you think that that would help you advance your knowledge and understanding of trading. Anything you want to add to that, Aaron?
No, but I'd like to move on to a question, if that's okay.
Yes.
So Bob is asking, I bought a Tesla call 2 days ago on a daily cycle finder plus cross. How do you recommend placing the closing order tomorrow morning? Should I wait for the opening before placing the order? So what Bob is talking about is a Tesla position, again, based on the Cycle Finder Plus daily cross. Tesla reported earnings today. And last time I looked, I think they were up 70 points. Post-market, 73 points. So Bob, I took the same trade on the same daily cross. So my plan tomorrow morning is to modify my closing order prior to market open based on my delta and based on what pre-market says for Tesla, because this can change between now and then. But let's say it's 72 still tomorrow morning, and you hold a 30 delta. That's a $21, I'm rounding down, $21 price increase to your position. So if the current cost base, whatever the current cost basis on your position is, you could, or not cost basis, I'm sorry, current mark on the position is as of right now, you could add $21 to that and place that as your closing order. You can also leave your GTC where it is at and hope for a favorable fill, but I plan to evaluate at pre-market and adjust my closing order. I'll probably round down, and then if I get a favorable fill, great. If not, this is already much higher than the original GTC order I was looking for.
Make sure you take the time to congratulate yourself too. That was a killer daily cross.
Yeah.
Yeah, if you got in near the open, that's about a 140-point move.
Well, and I know on my position that actually Tesla pulled against me first, because this was on the 28th was the daily cross. So it pulled against me, but nothing told me to get out of the trade. So I'm continued to hold, and then we have Tesla earnings, and we'll see what pre-market is tomorrow morning. And another Bob saying Tesla's up about 104. I'm just looking at TradingView right now, but any number doesn't matter until tomorrow morning, where we see where Tesla is at that point.
It's a great way to manage that, though, Aaron. And if you're not quite spot on in estimating where the option price might open, you're better off to lay back a little bit, hold back a little bit, and maybe underestimate, because more than likely with that big of a move, you'd get a favorable fill on your option. Todd's asking, are the metrics, I'm assuming you're talking about the metrics on the PSSM, Todd, actual trades by a real person or theoretical? Every one of the metrics are based on looking at trades, with the exception of Shopify that we just added. But the prior metrics were all based on following along with the performance every single day. And on Shopify, we went back and did a historical relook at the trades. And the cool thing about the tool is it starts, even if it was all just a hindsight review by replaying each day, it gives you a basic starting point. And then if you keep current on it, or if you take advantage of our offer and get yourself current, everything through this year is stuff that Erin tracks on a daily basis. She's monitoring it every single day and looking at those crosses every single day. And then that just starts to build more and more of a history. I mean, just imagine if you took the tool and you did this for the next couple, 3 years, you've got 2, 3, 4 years of back history that your tool is very simply looking at. Say, if I want an 80% win rate, I know that in the last X amount of time, 80% of the time, the stock's going to move this many points. That's the sweet spot. That's a really powerful tool to have for any options trader.
And I know we have a lot of new people here, but there is the profit sweet spot matrix is a little bit conservative in its profit estimate. On the profit sweet spot matrix, you can see what your overall profit would be for a 50 or 40 or 30 delta. So for example, Tesla tomorrow will have a profit of $2.10 on a 30 delta. If you're holding a 30 delta Tesla, that is not going to be your profit, assuming that Tesla actually does open up 70 or 100 points to the upside. But in our recording, in our tracking, we're tracking just the sweet spot profit, not these gaps that do frequently happen on the stocks and the indexes. So in a way, then that creates this slightly more conservative overall profit. You can see at the top of Mark's chart in E4, F4, and G4, those are the total profits on a 50, 40, and 30 delta. Those are just assuming a 6-point sweet spot or a loss at a reversal, or you can also have somewhere in between there. But it does not include any day that had a gap where you didn't hit your 6 points, your sweet spot, on Monday, and then Tuesday Shopify opened up 10 points higher. It's still assuming that you only took a 6-point sweet spot.
You can scan down through here and look at how long the cycle lasted and the reversal. And you can see some of the points. I mean, here's a 238-point move on Shopify. 6 points is a sweet spot. You would have been out 6 points. Well, if you look back over that and you want to take advantage of more of those, you can increase your sweet spot by decreasing your desired percentage win rate. Here's a 48-point move. Here's a 21-point loss if you held for the whole cycle, but it moves 6 points favorably for you before it hit that. So it's a 6-point profit times your delta. Sorry. So all of the data is in here for you to be able to evaluate. So those of you who are people who just love to analyze data, this is a great tool for you.
Mark, Bob's asking, is the advanced option course the same course as several years ago, or is it a new course?
It's a kind of a revamp of the course that we taught on advanced spreads a few years ago. So if you have that course, Bob, and that is, you still have that course, absolutely, that you don't need to grab this one. You've got all that same data.
TJ's asking, are straddles still working with lower volatility?
So the strangles that we were trading extensively, as we got into a handful of them, 3 or 4 of them, and volatility started to come down more significantly, we are left holding those. So we're managing a couple of them, and we've got a couple of them, actually one on Tesla, we'll see how it fares tomorrow, and one on Amazon, which is reporting earnings tomorrow. Overall, the value of those 2 strangles is down right now, but we've got plenty of time to expiration. So those 2 in particular we were holding into this week because we knew earnings were coming out this week on both Tesla and Amazon. And a lot of our movement, a lot of our profit movement off of our watch list of stocks has come around earnings and some of the bigger gap moves. And that's one of the reasons that we trade those. So I would say it's not as effective right now with volatility decreasing. And that's one of the reasons why we're a bit more focused on the market tamers and also just one side of the equation, calendar spreads, because you're working off of very rapid time value decay on that short leg. And the long leg will have some degradation to it. But if it's constructed properly, that short leg is going to have very rapid time value decay, and it will help elevate the overall value of the position to a profit.
TJ is asking, and TJ, I'm assuming this is based on the Profit Sweet Spot Matrix daily crosses. He's asking if we exit by the end of the day. So we follow the Cycle Finder Plus. Mark talked about that a little bit, and use the Cycle Finder Plus to tell us when to exit the position. The majority of our positions, our average days in a trade is less than a day. It's 0.34 of a day. So majority of our trades, we are in and out the same day.
David's asking if you know just a small part of options, does this work for novice?
If you don't have a lot of experience as an options trader, I personally think that the daily crosses is one of the simplest things you can do, because you come to the market each day. We're only taking crosses that happen first thing in the morning, and you're opening the trade. Then you're placing a good till canceled order to close it based on the PSSM, and then you're looking at the trade the next day. And there's also a question out here, I think it's from Samir, that I'll tie into this, which is on the daily crosses, what's the preferred criteria for closing the trade with a loss if the trade doesn't work out? So very simply, if you've opened your trade, say it's on Tuesday, and you bought to open a put, and you come in, and on Wednesday, the Cycle Finder Plus reverses and crosses back up, you take the trade off. It's a very simple, technical decision. It's not an emotional decision at all. You just take the trade off. Every piece of data in the PSSM is based on exactly that. There's no hesitating about, well, should I take it off, or should I wait, or should I reinterpret, should I look at other things? So that's how you manage those trades. And I think, David, it's a very simple process.
feel like we might have already addressed this, but just in case, Charles is asking, are the daily entries based on end of day or at the end of day signal? It's based on the 9:30 a.m. Eastern time signal on the Cycle Finder Plus.
And let me go back to Todd just for a minute. I'm not sure I understand what you're talking about, Todd, when you say no, the first slide, not the PSSM. I'm not
I
sure
think he's
what.
talking about the daily cross performance that
Yeah,
I trade and track.
Yeah, which is all based on the PSSM. That's all based on the PSSM. And Todd, just as a follow-up, you're listing short and at the money call and short and at the money put. Yes, and long at the money call, long at the money put. Yes, that's what we're doing. We are trading both a call spread and a put spread, generally out of the money, as long as the long legs have reasonably similar deltas.
David's asking on the Tesla note, what are your thoughts on our strangle we currently hold?
Yeah, we just talked about that.
Okay.
Who was that, David?
Yes.
Yeah, we just talked about that. So with the Tesla strangle, we're behind on it. As of today, we have time to expiration, and Tesla just announced earnings, and somebody said they were up 104 in extended hours. Right now, unless my numbers aren't right, I see it up 71. But we're going to take a look at it tomorrow and see whether or not this move, this type of a strong move, helps us get to even or a profit on that strangle.
Robert's asking, where do you find the cost for coaching? Just feel I should talk to someone before I jump back in the new platform, taking advantage of your free 1 week live trading, going to start slowly and do not need all the information you're providing. Do not need all the information you're providing.
If you want to send Dorothy an email, dorothy@optionsmoneymaker.com, she will be happy to work with you and share with you what the different levels of one-on-one coaching that we have available. And then we can try to tailor something around what your needs are.
TJ is asking, do you still buy plain puts and calls? That is exactly what the daily crosses are tracking, and the profit sweet spot matrix is all based on buying a call when you have a Cycle Finder Plus cross to the upside, and buying a put when you have a Cycle Finder Plus cross to the downside. And then Michael's asking, let's say you have 3 daily crosses and you want to take all 3, but by the time you get to the third stock, the price has already moved 3 points from the opening price. Do you adjust the sweet spot for the stock by this movement? So if it moves 3 points, so let's say that we have a cross to the upside on Shopify. By the time I get to Shopify, it's actually moved lower. I personally don't adjust the sweet spot. I consider that a favorable fill, and I keep my sweet spot the same based on my entry price. Now, if I'm looking to open a call and by the time I get to the stock, it's moved 3 points higher, then I set a price alert on TradingView for when it hits the sweet spot, and I evaluate my position at that time. If I have a profit, I usually will just take the trade off since it's already hit the sweet spot for my desired win rate, and then I just take my capital back, take my profit, and look to recycle it into a new trade maybe tomorrow if we have another daily cross. That's personally what I do with the daily crosses.
Let's see, Bram is asking, okay, just skipped on me. There it is. I joined late. I've started this week with the trial week. I'm a little confused with all the data on the chart. Do you have any webinar on how to understand? And then the second question is, does Michael call the signals to buy and close? I was not participating the whole day. Thanks.
So as once you subscribe to the charts, there's actually a whole series of instruction that comes with the charts. We don't have anything in particular outside of subscribing to the charts, but we do explain in detail the indicators. So that's probably your best starting point, is a subscription to the profit flow analytics charts through New Cycle Trading and Analytics. What was the second part, Michael, of the question?
Does Michael call the signals to buy and close? I was not participating the whole day.
So what we do, and Michael's pretty much the lead on this most days, is we help you identify the signals. We help you identify where a good entry is. And we can't identify all of them because, you know, some people are trading the NASDAQ, some are trading the S&P, some are trading the Russell. But we'll focus on primarily the S&P and the Russell, and we help you identify a good 3-minute entry, a good 10-minute entry, and then it's up to you to decide how you want to take that trade. Whether it's something you want to take as a futures trade, maybe a micro futures trade, an options trade on the cash index, or an options trade on the corresponding ETF. So the simple answer is Michael is calling out the signals when is an appropriate signal to get in. And he's got a lot of other data too that is not necessarily accessible by you easily. He's using 30 plus years of experience and a lot of other data where he's identifying potential price levels that the index or stock could move to, and the probability of it moving there, and even narrowing it down to, if it does happen, it's going to happen between this time and this time. So all of that data is provided kind of as a running commentary in the live trading room. If you want to, I'm going to add this. It's a little compliment to you, Michael. But if you want to trade and you really want to immerse yourself in learning how to trade, spending time in the live trading room and just kind of listening to Michael articulate what's happening in the movement. We didn't get across there. We've got alignment between the 3-minute and the 10-minute. Here's a divergent bar. I think the price will go up to X and it'll hit that by 10 o'clock. That is invaluable data to have as a trader if you're an active trader throughout the day. If you're just a very, very casual trader, pop into the live trading room, listen to Aaron the first few minutes of the market, identify the daily crosses, take those trades, and then be about your day.
Jay's asking, for day trading, you don't want to use spreads?
Well, that's entirely up to you. We're not specifying the strategy for you to use. You can use spreads. I personally think if you're going to day trade off of these 3-minute and 10-minute signals, that just buying a call or buying a put or using a futures contract is the most effective way for you to take advantage of it. But sometimes the cost basis of the buying a call or the put is more than you are comfortable with. So you could buy a debit spread. And of course, we've been using strangles and straddles in our trading for the last couple of months too.
Joe's asking, if my daily cross goes strongly against me, is there a good systematic way to exit without having a large loss that offsets my profit numbers? So the first thing I would evaluate is your desired win rate. You can change those numbers in the PSSM and you'll see how the overall profits based on that sweet spot changes. That's something that you can absolutely evaluate. I haven't found it to be really that much of an issue because with an 80% win rate, while I will have losses and they'll take out profits, that's just the nature of trading. And the current daily cross win rate that we've been showing is actually a 90% win rate, even though all of these sweet spot numbers are based on an 80% win rate. So there will be losses, and that's fine. But then you're also going to have days like we've had with Amazon gapping up, and you can grab a much larger profit than your sweet spot, or Tesla gapping up where you can grab a much larger profit than your sweet spot. And me personally, what I found is those all seem to even each other out for an overall growth of the account.
Yeah, Todd, I see your comment about the market tamer and your opinion about Vega, Theta, impacts and all that. I'll just tell you, I've been trading market tamers for probably 4 to 5 years now, and I don't agree with your assumption. There are some market tamer trades that don't work out, but it all depends on how properly you position the strikes. You want to try to position your strikes outside of reasonable support and resistance so that you're taking full advantage of price movement and cycling within what we call the sweet spot, which is the put strike and the call strike. And as long as it stays inside that range, then you have full opportunity to take advantage of the decaying time value of those short legs. And the example we used today was a June-May. We typically don't go out that far. We typically are going out 1 week on the short legs, and we're going out another 2 to 3 weeks on the long legs. So we're leveraging very rapid time value decay in a short period of time. And I'm going to tie this into Amit's question also. Said his question was in reference to the SPX market tamer that we hold right now. And you're asking, but you asked specifically about one strike. We're not looking at it on one side of the equation. We're looking at the entire four-legged combination. And we're in the money right now on the calls. We'll see what tomorrow brings. The short legs expire on Friday. As of close today, there was still about $10 of time value decay in that position. So we just have to evaluate the combination of the four legs, not just the one side. And that's why I think we were a little confused on it, because you asked about that particular side, that particular strike. Todd, we are not using all of the signals that you see on the chart for each trade indication, each trade decision. Right now in this current environment, we're primarily using the Cycle Finder Plus. There will come a time where the market will shift in its volatility and its nature, and that's when we find a huge amount of success in a combination of the original Cycle Finder and the Profit Flow Oscillator. And then learning how to use the Profit Flow Oscillator in combination with the Trend Consensus and the AO. We're not using all of them at one time, but over time, we do use all of them. But right now, in this current market, we're primarily using the Cycle Finder Plus.
I'll maybe chime in there to say the whole goal that we've had is to create tools that allow you to trade in any market. And for sure, many of these tools were created last year, which is a totally different trading experience than we've certainly been experiencing the last even 30 days, 90 days. So as Mark said, primarily right now, Cycle Finder Plus has been very bread and butter. But there will be time, absolutely, I'm sure, when the others come back into play. It's just a matter of having everything in your toolbox. And also, there is no tool we make that we do not trade with live money. I've used all these tools personally and continue to do so on a constant basis.
Mark actually said this quite a bit ago on prior education. He says, you don't show up to build a house with just a hammer And that's exactly true. You don't show up to trading with just one strategy or one indicator because markets change. A couple months ago, this was a completely different market. And even just a couple weeks ago was a completely different market. And so you need to have all the tools in your toolbox. It's something that we really preach, is that you need to have everything, all the strategies and indicators to adjust for current market conditions.
Right. And we will continue to update and improve things always as we go along, because we always want to have the best tools for ourselves, but also to share with everyone else.
TT's asking, do you ever use futures and options in combination to hedge?
It's possible, TJ. It's not something that I personally do. I don't think Michael or Aaron do, but I mean, it's possible. It just adds a level of complexity. You know, it can also already be busy when you're trading, especially if you're trading 3 or 10-minute charts, to keep track of your entries and exits on your current positions. If you're trading 10-minute, 30-minute charts and you're trading overnight trades, you know, it's possible that during the day you can hedge with futures on an existing options position, but we don't specifically focus on that. But there's nothing wrong with the concept.
Richard is asking how to use the profit sweet spot matrix for intraday futures. How to use the profit sweet spot matrix is covered in the masterclass, how to use every aspect of it, how to read through it, and find the best way to utilize it with the daily crosses, the intradays for options, and intraday for futures. Mark's saying, I thought we decided not to open any more options trades for a while because they weren't working correctly. That's not entirely true. We were evaluating call options that weren't behaving the way that they theoretically should have, but that doesn't mean that we're just not opening any options trades.
No, and Mark, we shared that with you in the live trading room because it was something we had noticed. It was a phenomenon that we had noticed just a couple of times over the last couple of months, but one of them was this week when we noticed that the S&P 500 moved up 35 points and the call option part of our market tamer didn't budge. In fact, it was down 2 points. So that was a little odd, but you know, it doesn't make me want to not trade options.
Joe's asking if my daily cross goes strongly against me, is there a good systematic way to exit without having a
I'm
large...
sorry, Michael, I didn't clear that. I answered that. That is my fault.
Samir's asking...
that happened before.
Sorry.
Samir's asking, I missed a few minutes of the start. Can you explain the new markers on the new cycle trading, Cycle Finder Plus?
Yeah, Samir, we're going to be sending out an email in the next few days inviting you to a free training. This is the Cycle Finder Plus 2.0. It will be available. It'll be made available to you once we go through the training. But the new markers are basically identifying divergent bars. So very simply, those on the bottom here in the buy zone are indications, divergent bar indications that we might move lower, and those on the top are indications in the sell zone that we might move higher. So they relate to divergence bars, and then the shape and color and size of them will all be explained in the training, but they relate to the strength of the divergent bar and something that you can incorporate into your decision making when you see the Cycle Finder Plus cross. In the meantime, you will immediately, when you get the email tomorrow, have access to being able to put divergent bars on your price bar. And what we've done is we've created an indicator that is a combination of divergent bars and fractals all in one indicator tool, so you can have those on your price bars.
And this was done with all of you in mind because we know that there are limitations based on subscription level to TradingView, and a lot of you already have the fractals on your chart. So by combining fractals and divergent bars together in one indicator, you can remove your current fractals off your chart and add the new cycle trading indicator, which has both of them, and it'll just be one indicator instead of two separate ones.
James is asking, the most recent current open positions is dated 4/23/2020. Is there a newer alert? If so, why is mine
That's the
not
most current
updated?
alert. You are updated. That's the most current. We have not changed our open positions.
I can answer Jack's question. Yeah, if you go to the traders blog at traders.newcycletrading.com, you can see my updates. It's been a little bit quiet lately. As I've said, I've been investing a lot of time in working on the updates to the Cycle Finder Plus. So the last month has been a little bit quiet compared to previously, but I expect to ramp up again very soon.
TJ is saying, so you open and close your option positions based solely on technicals of the underlying.
I feel like that's a trick question. I mean, I'm not sure what else you would open or close them based
Well,
on.
you could, if you're not trading indexes, you're trading stocks, you can use fundamentals. There's a lot of fundamental traders out there. And there's a lot of people who don't believe that technical indicators are all that they're cracked up to be. I have a completely different view of that, but yes, we open and close based on the technicals. Now, sometimes Michael's looking at a dartboard,
you can do them based on moon signs too, but it's
Yeah.
not quite the same performance.
Or whether Mercury's in retrograde.
Well, the best thing to do is don't think. If you start thinking, you're gonna make a mistake. So you just got to follow. You got to follow the technicals because,
Yep.
I mean, if you don't, yeah, you just can't. You
I'll
can't.
say, sorry, I'll say this too. This is a personal thing for me. Is I know there are people out there that don't really take as much stock in technical signals as well. I always try to judge my own be skeptical of my own analysis. The math is absolutely working right now. There's so much in the fundamental view of the market that I think is out of whack. But you know what is working? The math. Technical signals are absolutely working out, and you see that every day in the live room.
Yeah, Craig. And the issue is if you start thinking, then you're gonna make a mistake. You got to follow what the chart tells you to do. If you start thinking, you're gonna mess up. So give you I'm trying to think what to say here. Give you something to do here. Try to swallow 5 times as fast as you can. You can't do it because you're thinking about it. It's impossible. Try it. Just try it when you hang up today. Try to swallow 5 times in a row because you're thinking about it. You can't do it, but you swallow all night long because you're not thinking about it. So don't think about it. Follow the chart, what it tells you to do, and be a robot. That's just the best way to do it. Because you start second guessing, you're gonna make a mistake.
I always like to come back to the S&P 500, the Daily Cycle Finder Plus, and we had a lot of conversations about, when would that multi-year longest bull market we've seen, when would it start to falter? And if you looked at a lot of the fundamentals, you would have a hard time believing that the market could go higher, but it did continue to go higher. There were cycles lower, and we could take advantage of those using a daily cross. But the daily Cycle Finder Plus crossed down on February 18th, and that day the market closed at 33.70, and you can go all the way down to the low, which was on March 23rd, and that day the market closed at 22.37. That was a technical move right there. Now, I can guarantee you that we wouldn't have held. The way we're trading technicals would not have held during all that time because there was an indication to go long here, and you can see that there was a short-term 3 or 4 day move to the upside. And then there was another indication to go short here, and it continued to move short. Bottom line is, Michael's absolutely right. Don't think about it. Learn your technicals, and even beyond all of that, don't listen to the news and do what everybody on the news is talking about. You can listen to 10 different talking heads, read 10 different analysts, read 10 different blogs, posts, articles, and it's all going to confuse you. And none of it is based on good, solid technical data. It's all based on opinions and their own research. And I'm not faulting these people. I'm not saying that they don't know what they're doing. They're pretty smart people, but we've found that the best approach is following the technicals.
See, TJ says options on the SPX gives you the best bang for your buck, question mark.
Yeah, I like SPX options because of the tax advantage.
That is an advantage. Cash settled indexes, you have a tax advantage. SPX can be expensive, but you can trade SPY. There's a huge amount of open interest on SPY, and SPY relates to 10% of SPX. So you can use it exactly the same way, offer the exact same technical signals, but you can trade less capital. You can trade more contracts and still have less capital. So I like trading both SPY and ES futures, as well as the cash settled index SPX directly.
Michael's asking, I just want to verify, we did not adjust our entry exit points lately. If I review the masterclass sessions, are they still current?
Yes. Yes, the masterclass was all focused on Cycle Finder Plus and how to read that relative to the other technical indicators. But in this market, Michael, we've been primarily focusing on Cycle Finder Plus and looking at alignment between timeframes. So when you look at what Michael shows every day, he's primarily looking at 10-minute and 3-minute charts. So you'll see side by side a 3-minute chart and a 10-minute chart, and we're looking for alignment between Cycle Finder Plus on those two timeframes. When you get that alignment, and then you also see a divergent bar on one or both timeframes, you're starting to stack the deck in your favor in terms of technical signals.
And just to add, all of the tracking that we show, the performance history of the daily crosses, that's all based on the rules that we taught in the master class as well. I'm a rule follower, so.
Yes, you are. That's one of the reasons we love you, Aaron. Bill is asking or saying, I like that you post in the app. It would be helpful if you see the post, the price of the underlying, and the time you made the trade. So we send out app updates pretty quickly after any action that we've taken, and it's automatically time stamped. And in terms of the underlying price, our objective is to get the information out in front of you as quickly as possible. And it happens generally within moments after we've taken that action. So price hasn't moved significantly.
Thanks, Michael. Thanks.
All right, guys, I don't see any other questions out there. I just want to say I sincerely appreciate everybody being here, investing your time in letting us help you learn how to trade options and futures. And I have such tremendous respect for this group of people here, this team, Aaron, Michael, Craig, and we all have a desire to help you. If you're winning, we're happy. If you're succeeding, we're happy. If you have a desire to learn, we'd like to help you. So you just let us know how we can help, and we really sincerely appreciate you being part of our community. Last question goes to James tonight. Can you give a quick overview of what action to take when a cross up or cross down occurs at 9:30? If it's crossing up, you're buying to open a call. If you're crossing down, you're buying to open a put. Then you look at your PSSM. You determine what your personal preference is for a win rate. If you set it at 80%, for example, that's going to give you your sweet spot. And then you take that sweet spot and multiply it times the delta of your position. That will give you a number that, when added to the cost basis of your position, gives you your exit target. And you place a good till canceled order to close at that exit target, which is your cost basis plus the profit. And the next time you need to check on that position is the next day. All right, guys, thank you very much. We're going to go ahead and close out tonight. We'll be back at it in the morning. Again, thank you very much for being here, all of you.
Thanks, guys.